With all that's going on with the market, by the way, welcome to the B.F. Anderson Technical Report for February 25th. All that's been going on with this GameStop and Reddit and all the social media, and it really has gotten my attention. Now, this is very subjective. When you get into sentiment readings and sentiment feelings, it's a very subjective, contextual concept. But like the other day, last Saturday, I was at the Benny's Car Wash on Perkins Road in Baton Rouge, and the guy working at the car wash was giving me stock tips. And I asked him, I said, are you using Robinhood? And of course he said yes, he was. So this is Joe Kennedy, and he said, when the shoeshine boys have tips, the stock market is too popular for its own good. Well, it's just something to think about. Not saying that this is 1929, just simply saying be aware of the fact that we've got a lot of people very aggressive and very greedy in this world right now. Let's just pay attention to the trends. As we can see here, the NASDAQ has had an additional pullback. This is somewhat abnormal because if we look at the last several months, you can see that this was somewhat of an abnormal drop where we broke below that 50-day moving average. So just be aware of the fact that the trend is being challenged here. Would be somewhat defensive. We have raised some cash in our portfolios. However, on the long-term basis, or what we call medium term or intermediate term basis, the 35-week moving average continues in an uptrend. The index is above the moving average. Now remember, the rule here for a sell signal is like back here in March, you have to stay below the 35-week moving average for 2 consecutive weeks, along with the S&P 500 doing the same thing. Now on the 10-20 moving averages, which are monthly moving averages, continue to be in a very positive pattern here. Continue to say bull market. We'll look at a interesting comparison of the 10-20 here later in the video. The S&P 500, same thing. We're in a very constructive pattern, no problem. China continues to be on a golden cross. Has been very strong, pulling back a little bit so far. As you can see here for the month, we've pretty much pulled it back to about half of our gains for the month. There's been a pullback in this market. Now on the net new highs, the New York high-low index, you can see here we are getting quite a few new highs. The actual New York Stock Exchange Composite Index has actually hit a new high here. So you can also see that the moving average, the 10-day moving average, is in a positive uptrend. Now the new lows, we had a bunch of new lows come in the other day, so this is a little bit of a warning. We call this the leaking boat syndrome, the leaking boat indicator, where if you're getting new highs in the market, but at the same time you're getting more than 40 new lows a day, it's just something to be aware of. It's kind of giving you a little bit of a warning there. Now, on the aggression index, we have seen a pullback here after making a new high. You can see here where basically the technology stocks have cooled off. However, the actual indicator, we continue to be above the 40-week moving average, and the indicator is in a positive uptrend. Now, on the S&P 500, just to take a quick look at that, we got 25 and 50-day moving average. You can see that little bit of abnormal activity here came down, hit that 50-day, held, and pulled back up again. Now, again, we've got a nice uptrending 200-day moving average on the S&P. A little bit of white space in here. Remember, this could be a pullback to get a little bit more normal on the spacing between the moving average and the index. But so far, it continues to make new highs. Now, here we have the real culprit here, which is interest rates. We're looking at the 10-year U.S. Treasury yield hitting a new high for the period. We'll talk a little bit more about this as we get into the video. This is oil. We'll talk more about oil as well. Now, you can see the financial stocks are benefiting from the higher interest rates. They continue to be somewhat of a leadership in the market right now. Now, on the put-call ratio, we continue to be in heavy greed. Not seeing much relief there. We could quickly go back into fear. It's just no way to predict it. However, it is a secondary indicator, and like I say, when the guy at the car wash is giving you stock tips, things are getting kind of greedy. This is the volatility index. We're below 30. We continue to be constructive here. As long as the market stays in a steady uptrend where there's low volatility, that will attract more investors. Now, just to kind of take a snapshot at a couple of the areas that are looking interesting, this is the airline stocks. This is the XAL, which is a airline index breaking out, really showing some recovery signs here from the pandemic. As you can see also with the transportation index, which is mainly airlines, you can see it's doing quite well also. Now, on the utility average, this is interesting here. The Dow Jones Utility Average, which is the utility stocks, has somewhat gone into a downtrend here. In fact, actually broke below a basing pattern here. This has a lot to do with interest rates. Utilities tend to act like bonds. You know, there's no growth there, so you get a dividend that's like a coupon on a bond. So they behave like bonds. They're somewhat defensive as well. But you can see that the downtrend here is saying that, you know, interest rates may be heading higher. So on interest rates, this is the 10-year U.S. Treasury yield. What I did is I went back to 2010 and pretty much showed the range of interest rates on the 10-year Treasury. You can see we got down to this low period here, then rallied up, then broke down. You know, this was around the time of the pandemic. We got down to very low interest rates. I mean, we're looking at about 0.5% was the low, which was set back in the summer. Now we're up to almost 1.4%. That is a dramatic move. So what we're concerned about would be is how dramatic this will be. Will it come up here and stabilize or get back into this box and rally up to 3%? We don't know, but this could be a real indication that inflation is starting to become a problem. Now, speaking of inflation, one of the components of the Commodity Research Board that we talked about last week is crude oil. This is West Texas Intermediate. Now, what I've got here is the 10-month versus the 20-month. This is a very good indicator. This is long-term stuff here. You can see here that we got a death cross in oil way back in 2014, and we really haven't done anything since. But you can see here we're close to making a golden cross here. Now the current price on the barrel of West Texas is $63.22. The moving average right now on the 10-month is $44.29. So it's probably going to give that golden cross if I had to guess. So we're starting to see strength in things like oil, copper, aluminum, all kinds of commodities. Now, what I wanted to mention here is something called a buying thrust. What is this particular indicator is the percent of NASDAQ stocks above their 150-day moving average. Now, what I did is I went back to 2002 to show the times that this has happened in the past and how this kind of goes with market bottoms more than market tops. You can see here we dramatically came down to about 10% of the stocks were above their 150-day moving average, and then it rallied to where 80% of the stocks were above their 150 days. So you got that, and you got basically a bottom in the market. Same occurred in 2009, and we got the thrust. That was a bottom in the market. Now we got the thrust again from the March 23rd low, where we got down to less than 10% above 150-day. We've since rallied. So it's saying that the market's got a lot of momentum, and it's also got a lot of greed and negative sentiment. But like we say, that's a secondary indicator. Now, like I mentioned, this is the top five. You're going to see something very interesting here. We're seeing, Freeport-McMoRan looks very strong, very powerful uptrend. So we're looking at copper prices with that one. Here's Novavax having to do with the vaccine. We got the big gap up. It rallied, pulled back, trying to hold that gap up base in here. However, we'll just have to keep an eye on it. I would avoid this stock for now. Here's an energy stock, SM Energy, exploration and production. Also, I think they're into fracking as well. You can see stock is acting real well, making an all-time new high. Very steady uptrend, however, somewhat volatile for me. Here's Snap, which is social networking. They made an announcement just the other day. I believe it was earnings. Anyway, major rally up, came down, and then rallied back up by the close, and then broke out to an all-time new high today. Tapestry, we own this stock. This is a company that deals in luxury handbags for women. Stock made an all-time new high. It continues to be in a very powerful uptrend. I guess this is where the stimulus money is going to go in things like luxury goods, believe it or not. So that's it. If you have any questions, please let me know. Thank you very much.